How is a finance charge calculated? Have you ever wondered how credit card companies determine the finance charges on your balance? Understanding this can help you manage your expenses better. A finance charge is the interest you pay when you do not pay off your credit card balance in full by the due date. Let's break down how this is calculated in simple terms. First, we need to talk about the annual percentage rate, often referred to as the APR. This is the interest rate charged on your credit card balance, expressed as a yearly percentage. However, it is usually applied on a monthly or daily basis. Next, there is the billing cycle. This is the time frame between two consecutive credit card statements, typically lasting between 20 to 30 days. At the end of this cycle, any unpaid balance will incur a finance charge. Now, let's look at how finance charges are calculated. There are a couple of common methods used by credit card companies. One of the most common is the daily balance method. This method calculates interest daily based on your balance for each day of the billing cycle. The daily interest is then summed up to find the total finance charge. Another method is the average daily balance method. This one calculates the average balance over the billing cycle. To do this, you add up each day's balance and divide by the number of days in the cycle. The finance charge is then calculated using this average balance. If you want to calculate the finance charge using the average daily balance method, here is a straightforward formula. Take your average daily balance and multiply it by the APR. Then multiply that result by the number of days in the billing cycle and divide by 365. Let's say your average daily balance is $1,000, your APR is 18%, and your billing cycle is 30 days. First, convert the APR to a decimal, which gives you 0.18. Next, calculate the daily interest rate by dividing 0.18 by 365, resulting in approximately 0.00 for 9315. Now, multiply your average daily balance of $1,000 by the daily interest rate. This gives you about $0.4931 per day. Finally, multiply this daily finance charge by 30 days, which results in a total finance charge of around $14.79 for that billing cycle. To avoid finance charges, it is best to pay your credit card balance in full before the due date. Additionally, consider using credit cards with lower APRs whenever possible. Making timely payments can also help reduce your average daily balance, further minimizing finance charges. Understanding how finance charges are calculated can help you make better financial decisions and avoid unnecessary costs. By keeping track of your balances and payment dates, you can manage your credit card expenses more effectively.